Summer is great to make money on property. Everybody loves it. But then you also have to pay your dues to the government, which is taxes. So how can you actually optimize your tax or save your tax on property sale?
Manisha, the taxation issue has become far more relevant now because circle rates have gone up, and therefore there is far more money that is being recorded as being part of the property sale than was before because of the black market before. So now tax has become a huge issue, and it is very important for customers to look at all the right tax advice before they actually do their either buying or selling transaction.
Even selling of the existing property, right?
Because it makes a huge difference in what your tax liability can be. There can be a 10% difference on when you sell your property. You could even just wait 2 months and sell your property 2 months later, and you could actually end up paying 10% less tax by waiting. So you can shift from a short-term capital gains liability to a long-term capital gains liability on your profits. So taxation is a very important element now.
All right, so just explain to us, how do we actually maximize our tax savings in terms of ensuring that we wait A for the long term, and B, how do we utilize the indexation benefit to make sure that we get our tax calculations all right?
My first advice would be that you must look at a tax advisor when you are actually doing a transaction, because it's very important to get the nuances of it correctly. Every case is specific and is different. Usually when you're selling a property, there is a period, so if it's a 1-year period beyond which if you hold on to your property, then you pay long-term capital gains on that property, on the holding value, and therefore the amount of tax you pay becomes almost half. So the difference between short-term and long-term capital gains can be almost equivalent amount. So 10% extra you can end up paying tax if you don't manage the time at which you sell your property that you have bought in the past. Secondly, the purchase. When you actually make another purchase, you can actually avoid all capital gains completely if you reinvest the proceeds from your previous sale into another real estate investment, which is why you'll find that maximum sales end up happening in March, when people are looking to reinvest their profits in real estate to save on tax. So all these things are very important to consider when you actually make either a buying or a selling decision.
They happen in March because they give you an extra time period to invest in, or they give you indexation benefits?
No, the advantage is that if you have made a sale where you have capital gains in that financial year, if you reinvest it in that same financial year before March 31st, you end up saving on the tax on the profit you made on the previous property because you have reinvested it in a new property.
All right, and at the end of it, how do you get the indexation chart? This is the tax advisor who should be able to calculate it for you, because this is not something that a common person should attempt to do. Even though an indexation chart is available on the RBI site, it's still better to go to a tax advisor?
So my suggestion would be you must always work with a tax advisor on taking advantage of indexation, because it's a complex calculation and it's one that can help you save quite a bit of money. And it's linked to inflation, and inflation has been high for the last couple of years. So there's a huge advantage on taking indexation benefit when you actually make a property transaction work for you. So getting the professional advice is very important on that.
And savings could go into lakhs?
Sometimes even crores.
Even crores, depending on how many crores your property is worth.
Correct.
All right, so that's the tax advantage that Samar just outlined.